the economy is rebounding from the pandemic, more people are finding jobs, which means more people are spending more money than they ever had before, which has led to the current level of inflation in the United States, reaching its highest level since 2008. In May, the Consumer Price Index climbed at an annual rate of 5%, which was up from a rate of 4.25% in April, and the highest rate since August of 2008. Most people are losing money because of inflation, but some people are making money because every problem can be turned into an opportunity. Welcome to Money Talk, where we discuss tips on making money. For this video, we are going to list 5 different ways the wealthy make money during inflation. But before we begin, don't forget to hit that like button, hit subscribe, and click the notification bell to receive updates and be the first to check out our latest videos. Just a heads up, this video does not provide investment advice and is purely for informational and entertainment purposes. With that said, let's get started. Stocks. Purchasing stock means purchasing a stake in a company. As a result, they're also known as shares. When the economy is overflowing with cash, the value of a business rises, so you're increasing at the same rate as the overall economy. You're not just battling inflation, you're also profiting from it because that money is usually spent on fundamental necessities and wants. Consider how much of that stimulus check was spent on Amazon or Apple products. Add to the fact that these corporations have taken out billions of dollars in loans for essentially nothing and have grown tremendously. People are returning to work. The economy is reopening. People are spending more. And these businesses are poised to expand even further. The goal is to have your money invested in assets that provide inflation protection. Typically, wealthy individuals hold little cash. Typically, people reserve a small portion of their net worth for emergency situations. Debt. The majority of you probably have a very negative view of debt. Yet, debt can actually be quite beneficial, particularly in circumstances where there is inflation. The value of $1 today might be greater than the value of $1 tomorrow, and that indicates that I will make a profit even if I borrow $1 today and return it the following day. The median price of a home in the United States is currently close to $350,000, but it was closer to $150,000, or less than half of what it is today, 20 years ago. This is due to the fact that the real value of the dollar decreases each year. $150,000 20 years ago is now worth $350,000. Consequently, when the Federal Reserve dropped interest rates and began purchasing corporate bonds, the world's largest corporations, including Amazon, Facebook, Microsoft, Apple, etc., even though they had no need for the money. Gold. Gold has historically been a very good inflation hedge. That's why a lot of people invest in it. Gold won't lose its value or become worthless like the US dollar might. In the last 100 years, the US dollar has lost more than 90% of its value, but gold has kept its value since the start of civilization. In 2010, investors got scared again and started buying gold so quickly that prices hit a record of $1,900. However, the economy has since stabilized and the gold bubble has popped. When the economy appears to be improving, investors typically do not purchase gold and instead invest in assets such as equities. As a result, gold prices frequently decline during predictable, steady times. However, when the United States launched a trade war with China in 2019, gold prices began to rise again, and the pandemic worsened the situation. For the first time, gold prices surpassed $2,000 per ounce. Looking back in time, gold has always been a terrific way to profit from inflation. And because we're already talking about inflation and investing, What have you done so far to ensure your financial stability during these trying times? Feel free to share advice and tips in the comments below. And don't forget to subscribe to our channel as well. Now, back to the video. Real assets. Most people don't realize that currency is just like any other good in the market, with a price that is set by demand and supply, among other things. Now, imagine a hypothetical situation in which there are $10 in the whole economy and only 10 houses. In this example, the price of a single house is $1. But if we put an extra $10 into this market, there would be $20, but still only 10 houses. This will raise the prices of the houses so that each one will cost $2. That makes inflation easy to understand. In order to prevent an economic collapse last year, the Fed decided to inject trillions of dollars into the economy by issuing stimulus checks and purchasing corporate bonds. In 2020, 22% of the dollars in circulation right now were created. Anyone with a basic economics degree realizes that inflation is on the horizon. Those who could afford a home at the time promptly invested in real estate instead of storing cash, especially given the historically low interest rates. It makes no difference whether the real rate of inflation is 2.4 or 3.4%, because according to some estimates, home values increased by 18 to 20%. This indicates that real estate investors not only beat inflation, but also made significant profits. The most astute investors, however, did not merely purchase residences, but also took out mortgages, as leverage transforms good purchases into great deals, especially given the historically low interest rates. Crypto. The technology has enormous potential, but because it is still in its early stages, it is extremely dangerous and volatile. As previously said, one of the reasons Bitcoin has risen so substantially in the last year is that the Fed has been printing trillions of dollars. After purchasing stocks and homes, investors thought Bitcoin was like digital gold. A lot of people who were not interested in Bitcoin prior to the pandemic don't really remember that the price of Bitcoin was just around $8,000. Before the trade war, the Bitcoin price was just over $3,600. If you were interested in Bitcoin when most people didn't care, you could have earned a fortune. But people usually get excited about something when it's all over the news. But the smartest people got into it before the masses and have grown their wealth by 10 to 20 times since then. Inflation is defined as the overall increase in prices in an economy over a given time period. The Federal Reserve usually aims for a moderate and stable rate of inflation of about 2%, which can indicate a thriving economy. However, economic shocks can cause inflation to rise into the double digits. One of the most effective methods to prevent inflation is to have a well-diversified and fully invested portfolio. Use this time to look at your finances and make changes that will help you in the future. If you enjoyed this video, make sure to hit that thumbs up button, click subscribe, and hit the notification bell to receive updates on our latest videos. Also, feel free to leave us a comment. If you want to watch more videos, head on over to our channel to see more from Money Talk. See you!